Yes.
So let's go ahead and take on an example which is on standard costing coupled with process costing concept on statement of equivalent units of output. Now let's go ahead and take on this question from May 2016 examination paper.
X associates undertake to prepare income tax returns for individuals for a fee. Now they use the weighted average method and actual cost for the financial reporting processes.
Very
However,
clearly given that the company uses average cost of the weighted average cost method to find the cost of processing the income tax returns, right? To determine the actual, that is based on actual cost for financial reporting purpose. Next.
Yes, sir. So, however, for internal reporting, they use a standard cost system. The standards based on equivalent performance has been established as follows. Labor per return 5 hours at rupees 40 per hour. Overhead per return 5 hours at rupees 20 per hour.
So basically given the standard cost of labor and overheads in filing one income tax return. It is 5 hours of labor time and the standard or the budgeted wage rate is rupees 40 per hour. And then these 5 hours of labor will also entail, you'll be incurring overheads at rupees 20 per labor hour. So 5 hours into rupees 40 and 5 hours and rupees 20 is supposed to be the standard cost of filing one income tax return. Next.
For March 2015 performance, budgeted overhead is rupees 98,000 for standard labor hours allowed.
They given the budgeted overheads rupees 98,000. Next.
The following additional information pertains to the month of March 2015.
So the entire data for the month of March 2015.
March 1, return in process 25% complete, 200 numbers.
What is the meaning? There are 200 units. Your staff were prepared, they were filing, they were filling up the income tax return. 25% is complete by the end of Feb, and that is returns in process, like your opening work in progress, inventory. These are returns that are in process, 25% complete and 75% to be completed. You know what is the meaning? We know that 5 hours is a time needed for filing one income tax return, right? What is 25% of 5? 1.25 hours would have been already spent. Another 3.75 hours to go to make it 100%. Is that fine?
Yes, sir.
So 25% complete. Then
return started in March, 825 numbers.
that means 825 income tax returns were started in the month of March. In all, I can say 200 are brought forward from the month of Feb. Another 825 units are started in the month of March. In all, if you add both, I can say 1025 returns or 1025 units are processed. That is in the process in the month of March. Of these 1025 returns, let us say how many returns were completed in March and how many returns are in process at the end of March. Is that fine? I'll read further.
Yes, sir. So, March 31st, return in process, 80% complete, 125 numbers.
Okay.
And cost data.
Then have they got number of returns completed?
No.
Not given. Now you can find out. Out of 1025 returns processed in all, we know 125 returns are in process on 31st March, not completed, only 80% complete. So what is 1025 minus 125?
900.
I mean 900 returns would have been completed in the month of March. That has been filed, right?
Yes, sir.
So out of 1025 returns are processed, 900 returns have been completed and filed, and 125 returns are 80% complete. That means what? You are supposed to spend 5 hours every unit, right? Only 80% means only 4 hours would have been worked. One more hour to go, right?
Yes.
That is the meaning. So 125 returns are in process on 31st March. Is that clear? Next.
Next is the cost data.
Cost
again.
data.
For March 1st, return in process labor 12,000 rupees.
You know what is the meaning?
Overhead.
Overheads how much?
5,000.
That means to complete the 25% work on those 200 units, I said, remember 25% means out of 5 hours, 1.25 hours have been already completed work. For getting that work done, what is the labor cost incurred? Rupees 12,000. And what is the overhead cost incurred? 5,000. These are expenses incurred on opening work in progress, which are 25% complete. Next.
The next is 1st
Cost,
March to 31st March.
That is a cost incurred in the current month, actual cost. How much?
Labor 4,000 hours. Amount 1,78,000.
You
And
saw
overhead
4,000 hours have been actually worked. And the labor cost incurred is 1,78,000. And overheads?
90,000.
90,000 is incurred in the month of March. Next.
Then you are required to compute A for each element equivalent units of performance and the actual cost per equivalent unit.
Nothing but calculate the equivalent units of output and also calculate the cost per unit. That means cost per equivalent unit. It is something what you guys learn in the chapter process costing, right?
Yes, sir.
And here more important, the company follows a weighted average cost method to determine the cost per equivalent unit. Next.
B actual cost of return in process on March 31st.
Basically, you have been asked to value the closing work in progress or the closing returns in process. Next.
The standard cost per return.
That is C. Find the standard cost. That is 5 hours at rupees 40 per hour. And overheads 5 hours at rupees 20 per hour. Find the standard cost of completing one income tax return and filing. Next.
And D, the labor rate and labor efficiency variance, as well as overhead volume and overhead expenditure variance.
Okay. So these are the questions asked. Fine.
Yes, sir.
Now let us go ahead and take on the first part, that is answer to subdivision A. But do remember the company follows a weighted average cost method. And remember under this method 900 units are completed. Even though 900 units includes 200 from opening work in progress, we do not differentiate. We'll put all the 900 units completed as 100% complete, right?
Yes,
because
sir.
100% that's when what? It is completed. When 100% return is completed and filed. Got it?
Yes.
Now let us go ahead and take on the solution subdivision A. You will find a nice table, right?
Yeah.
It is a statement of
Statement showing cost element equivalent units of performance and actual cost per equivalent.
and also the cost per unit. Okay, you're going to have details and input. You have the details
And
the
equivalent
output,
units.
all the units completed and closing work in progress. And then you have the two cost items. That is labor. You're going to have equivalent units and percentage. And overheads is going to be equivalent units and percentage, right?
Yes, sir.
Now just see the input column. If you want, you can skip this column. So just see opening work in progress. It is 200 units.
Yes, sir.
I say units, it's actually returns. And then another 825 units are, you started working on 825 income tax returns, right? That is in all 1025 units are processed. Under next output, it is going to be units completed or output. We know 900 units have been completed.
Yes, sir.
Now, when do you say it's complete? Only if it is 100%. Therefore, 900 units, 100%. 900 units, 100%, right?
Yes.
That is 100%, 900. And then comes returns in process, nothing but your closing work in progress,
Yes, sir.
which is 125 units, which are 80% complete. So 100 units under labor and 100 units under overhead.
Overhead.
These are equivalent units. Guys watching this video, anybody has a doubt, please go back to the chapter process,
Cost.
costing. You brush up your understanding of equivalent units of output, and then you are supposed to watch this video, right? So do not dive into this video straight away. You get how many units? Equivalent units? 1000 for labor and 1000 for overheads, right?
Yes, sir.
These are equivalent units of output, 1000 and 1000. Now, how to find the cost per unit? Please remember, as I said earlier, weighted average cost method, right?
Yes, sir.
The 900 shown as output, which is 100% complete, that includes 200 units
Of
of opening work in progress, which is 25% already complete,
Yes, sir.
for which you incurred how much? 12,000 and 5,000. So please include that also determining the cost per unit, right? Now just see the working. For labor, you will take 12,000 rupees plus 1,78,000.
Yeah.
And overheads will take 5,000 rupees plus rupees 90,000
1,000.
incurred in the current month. Add both. The reason is it is weighted average cost method. The 1,000 units, what you got, right, for labor and overheads,
Yes, sir.
that includes 900 units, right?
Yeah.
That is output that's completed. That 900 units includes 200 from opening work in progress, which is 25% complete already. For that, you incurred how much? 12,000 rupees and 5,000. Please include even that cost. As simple as that. So, you know how much? 1,90,000 rupees and 95,000
5,000
rupees.
rupees.
Then divide these numbers by the equivalent units, you'll get the cost per unit. Example, 1,90,000 upon 1,000, how much you get? Rupees 190 per unit. And 95,000 upon 1,000, rupees 95 per unit. Okay, that is answer to subdivision A. Then subdivision B, very simple. Now just see the equivalent units of output for closing work in progress. We have, I think,
125 returns.
of that 80% complete. So 100 labor, 100 overheads, equivalent units.
Yes.
So what are you going to do? 100 units into 190, or you're going to show the working this way: 125 units into 0.8, nothing but 80% complete,
Yeah.
which is 100 equivalent units.
Yes.
That into rupees 190 per unit, 19,000.
Yes, sir.
And overheads, you can either take 100 units directly into rupees 95 or 125 returns into again 0.8 a percentage completion, that into rupees 95. So how much? 9,500.
500.
In all, 28,500
500.
is a value of closing work in progress or returns in process as on 31st March. Is that clear?
Yes, sir.
Now answer to subdivision
C.
C is very simple. Find the standard cost
Per return.
per return. We know that the standard time allowed is 5 hours and the standard rate is rupees 40 per hour labor. You get rupees 200. Again 5 hours of labor. When these staff, these people are working on the income tax return, those 5 hours, what is the overhead cost incurred?
20.
Rupees 20 per hour works out to rupees 100. Add both. In all, rupees 300 is a standard cost of filing one income tax return. Is that fine?
Yes, sir.
And now the answer to subdivision D. Now we need to calculate the, what is the question asked?
Variance.
You have been asked to find the variance for the month of March alone. Okay, that is a catch over here. Now we know that 4,000 hours is actual time spent, right, by the laborers. It's given in the question. But those 4,000 hours are not spent on 1,000 units. You know why? I'll tell you. Just go back to subdivision A. Now remember we got 1,000 equivalent units for labor and overheads.
Yes, sir.
That 1,000 is made up of what? 900 and 100.
100.
That 900 includes 200 from opening work in progress, which would have been completed in the current month, right?
Yes.
Of the 200, how much is already completed in the previous month? 25%.
25%.
Therefore, even though we got 1,000 equivalent units, that is based on the weighted average cost method, right? That 1,000 includes 200 opening work in progress in it. 25% means what? Of that, 50 equivalent units are already completed in the previous month. Got it?
Yes, sir.
Therefore, what is 1,000 minus 50? So 950 is the actual output for the month of March. The 4,000 hours would have been spent only on how many units? 950 units and not on 1,000 units. You get it?
Yes, sir.
Got it? Therefore, please remember these 1,000 units, understand this, includes 200 from opening balance. Those 200 units, 25% of work has been done in the previous month. That is month Feb, right?
Yeah.
So remove those units and get the equivalent units complete, that is completed in the month of March, which is 1,000 minus 50, so 950 units. You have to get this right. Then only start working out variances. Is that fine?
Yes, sir.
Now just see the chart. You show the equivalent units what you got. How much you got for labor? 1,000. Overheads? 1,000. We have that on the screen?
Yeah.
1,000, 1,000. From that less, it is opening.
Returns in process at the beginning of March. In
that-
terms of equivalent units, it is 25% of 200.
Which was already completed. So minus 50 from both.
Yeah.
So 1,000 minus 50, it is 950 is the actual output for the month of March. Got it?
Yes, sir.
So that is the actual output for the month of March, 950 units. Only 950 will be taken for calculating variance because that is the actual output for the month of March. Got it?
Yes, sir.
Now, refer to labor variances. Now, guys, people watching the video, you must have learned, the way you learn standard costing differs, right?
Yeah.
It is, professor to professor. So that doesn't matter. This, you can apply this logic. L1 represents the actual hours paid for into actual rate, which is given as 1,78,000. No, sir, I want to find the actual rate. If you want, you can do it. Guys, take a calculator. You divide 1,78,000 by 4,000 labor hours. You get rupees of 44.5.
5.
Then you go show the working. 4,000 hours into 44.5, 1,78,000. That is L1. And what is L2? Actual hours paid for, that into the budgeted
Rate
per hour. Nothing but it is 4,000 hours into rupees of 40 per labor hour. How much? 1,60,000. And L3 is actual hours worked, that into the budgeted rate. In this case, there is no idle time. So hours worked will be same as hours paid for. So same 4,000 hours into rupees 40 per hour. How much you get? 1,60,000. And L5, standard hours for actual output. That into the budgeted rate. We know 950 units have been actually produced in the month of March, right?
Yeah.
950 returns, that into 5 hours time allowed for one return. So what is 950 into 5? 4,750 labor hours allowed. and that into rupees 40 per hour, that will work out to rupees 1,90,000.
90.
Now, how to find the variances? What are you going to do? You can either do L1 minus L2, okay? Or some people, what they do, write the entire formula.
Yeah.
You know, actual hours paid for into actual rate minus, you can use that formula, no problem. But please remember, 1,78,000 is the actual labor cost. That minus 1,60,000 is the labor cost based on budget, based on the budgeted rate. Therefore, rupees 18,000 what? Adverse. Rupees 18,000 adverse. And labor efficiency will be L3 minus L5. The actual time taken is 4,000 hours, right? But what is the time allowed? 4,750. That means that time taken is less than what is allowed. It is going to be a favorable efficiency variance. You can check that. L3 is what? 1,60,000 minus L5 is 1,90,000. So rupees 30,000 favorable. That is a labor efficiency variance. Is that clear, guys? So any other formula you can follow, no issues at all. But have this in mind, the actual output for the month of March is 950 returns and not 1000. 1000 is
Equivalent.
units based on the weighted average cost method. Is that fine?
Yes.
Next, we go to overhead variance. And here I conclude these overheads are fixed overheads because the question says that calculate what? The overhead budget variance. And overheads what? Volume. We find the volume only when overheads are fixed and not when they are variable. Is that fine?
Yes, sir.
So that is a clue. These are fixed overheads. So now just check this. What is FO1? The actual fixed overheads incurred, which is rupees 90,000. And what is the amount of budgeted overheads given in the question? 98,000 given. And FO5 is FO2, 3, 4 not applicable. Straight away FO5 we are doing because they asked only for two variants, right?
Yeah.
Expenditure and volume. FO5, standard hours for actual output, that into budgeted rate. Which is again 950 units output into 5 hours time allowed, 4750 hours, that into rupees 20 per hour. How much you get? 95,000.
5,000.
And expenditure variance, also known as budget variance, it is FO1 minus FO2. 90,000 minus 98,000. Your actual is something less than budgeted, it is favorable. Therefore, rupees 8,000 favorable. Do not attach any sign, okay? Yes. Rupees 8,000 favorable. And then next, your volume variance is FO2 minus FO5, which is 98,000 rupees minus 95,000 rupees, rupees 3,000 adverse, right?
Yes, sir.
And that is your volume variance, rupees 3,000 adverse. So guys, it's a wonderful example. This can repeat itself in examination. Learn this really well. It is two chapters combined, standard costing and process costing, in brackets equivalent
Units.
units. Is that fine?
Yes, sir.
Okay guys, bye bye.
Thank you, sir.